Good morning, everyone. Welcome to another Smart Knowledge U vlog. The topic of today's Smart Knowledge U vlog is called, what is the fair value of gold? Ounces over dollars. And the reason I'm making this vlog is that I still see a proliferation of confusion about how one should really value gold. Now, recently there's been a flood of anti-gold propaganda in the mainstream media in the United States, and I've seen news as ridiculous as two U.S. economic professors predicting that gold would now crash to $350 an ounce. I've seen another prediction from self-proclaimed futurist Harry Dent that gold will crash to $250 an ounce. I have seen a Wall Street journalist refer to gold as a pet rock, inferring that it has no intrinsic value, even though it's the other way around, where our fiat currencies now are almost purely digital, which means it's just a few bits on a hard drive on a bank's server, which virtually has almost zero intrinsic value. And so why is this? Because the last time I saw this flood of anti-gold propaganda was about 2008, when Lehman Brothers, Bear Stearns, and Merrill Lynch collapsed. And again, we had the same predictions, though people forget quite easily or quite quickly that the same predictions of gold crashing to $250 were going on back then, when the bankers were initially they were successful in rating the price of gold because it's set in a fake market called the futures market, and they pushed gold down from $1,000 to around $680 a troy ounce in October of 2008, memory serves me correct. But because this action was so fraudulent, in less than 4 months, the price of gold had rebounded way back up to $1,000 a troy ounce. But I'm going to cover in this video why our obsession with the price of gold is irrelevant, or will be irrelevant in a couple of years, because there's an enormous difference between price and value, and bankers have tricked us into equating value and price, even though there are two completely different concepts, especially when it comes to physical gold and physical silver. So again, the reason that there's such an anti-gold propaganda push right now is that bankers are trying to keep us out of sound money, keep us from converting our fake digital currencies into the sound money of gold, and to keep us ensnared and entrapped in their Ponzi fiat currency system. So bankers are a little panicky now, because their rule and their role as the modern day slave master is perhaps coming to a very quick end. Now, a lot of people say, oh, it's kind of harsh to compare bankers to modern day slave masters, because a lot of people don't really consider slavery to be real unless we're talking about physical slavery. But certainly financial slavery can be every bit as economically devastating to someone as physical slavery can be. Now, famous Russian author Leo Tolstoy, who lived from the late 1800s to the early 1900s, explained this concept in a very clear and concise manner. So I am just going to quote what he says, because I probably can't explain it any better than Tolstoy did. Now, Tolstoy said, let me find the quote for you. He said, quote unquote, he said, money, meaning the fiat currency money that bankers impose upon us, not to sound money gold. He said, money, meaning fiat currencies, was, quote, a new form of slavery and distinguishable from the old simply by the fact that it is impersonal, that there is no human relation between slave and master. The essence of all slavery consists of taking the product of another's labor by force. It is immaterial whether this force be founded upon our ownership of the slave or ownership of the money that he must get to live, end quote. So if you don't understand that quote, and you don't understand why fiat currencies are tantamount to a modern day slavery system and rotting currencies that bankers deliberately have created solely to provide themselves with a mechanism to steal our money by both stealth and by force, then I hope that you continue watching this video, because by the end of this video, you should understand this concept very, very clearly. So obviously, there's nothing worse than physical slavery, in which physical, in which slaves are whipped, beaten, dehumanized, subjugated, psychologically dominated, and often murdered without thought. But if a man is subject to financial slavery, and all of us are subject to financial slavery by bankers today, then neither can we claim that we are free, or can we claim that we even want to be free, as long as we don't rise up and kill this current fraud of a monetary system that we have right now. Okay, one quick note before I continue, because a lot of people always say, well, you say that you advocate owning physical gold and owning physical silver against this financial slavery system that bankers have imposed upon us. And I do. And people always say, oh, well, you always say you believe that gold and silver, the bull is not over and that prices will still rise much higher. And I do. However, that is not an endorsement for buying physical gold and physical silver right now, because from time to time people will make comments, because I never say buy now. I never say, I talk about how I believe in gold. I believe that prices will rise higher. And people say, oh, I bought gold because of your video and now I'm down. So don't confuse the two is basically what I'm saying. So I'm just giving you my little disclaimer. And in fact, on October 24th right now, I'll tell you the price of physical gold is a little bit above $1,170 an ounce, and silver is a little bit above $16 an ounce right now. And I actually believe that the bankers are going to set up to raid gold and silver prices again. Okay, so I'm just saying what my long-term goals are. So on top of that, I believe that gold and silver are going to go down the entire year for this year up until this point, because basically you can track my belief if you are a subscriber to my services, because with my Crisis Investment Opportunities newsletter and my Platinum newsletter, we have actually only owned gold and silver mining stocks for about 40 trading days out of the entire year this year. And in those 40 trading days, actually, gold and silver mining stocks soared. So for the year to date, we're actually positive in gold and silver mining stocks. We're positive year to date. And this despite the fact that gold and silver mining stocks, per the Huey Gold Bugs Index, per the Philadelphia Gold and Silver Index, have actually gone down by about 48% since the peak in January to July of this year. But I do believe they will make a very strong comeback. But again, remember, I never make any public videos where I talk about timing, because that is an issue I always reserve just for my services, my subscription services. Okay, so the other thing people say from time to time is that, well, yeah, you can critique these people like Harry Dent that say gold is going to collapse to $250, but they say, what about those in the gold and silver blogosphere that say, oh, silver is going to $70 by January of 2014 and it never happened, or gold is going to explode to $2,400 by April of 2014 and it didn't happen. Well, I'll make another short video about this. This is going to be a much lengthier video, because I want to ensure that everyone understands the points I'm trying to make, why we should value ounces over dollars when it comes to gold. So you can stay tuned for that and check that out. But either way, you shouldn't be listening to people that make those predictions that gold and silver prices are going to soar by a certain date, nor as much as I tell you to ignore the fools out there that say gold is going to go down to $250 an ounce. And actually, you should understand this concept without even watching that next video, which I'll make by the time you finish watching this video. So even when we value gold improperly by looking, say, at its US dollar price, if we go back to 2001, the start of the bull, to July of this year, gold has risen 330.9% versus the US dollar. Whereas the US S&P 500, because everyone's praising, oh, the stock markets are great. Look, they keep getting pumped higher and higher because there's ZERP, there's endless QE by central bankers, there's endless manipulation of the US stock market, of stocks getting pumped higher through bankers' use of high frequency trading algorithms, and it's great. But you look at the S&P 500, it went up 62.7% during that same time period versus gold's rise of 300.9%. So even if we value gold improperly by US dollar price, gold is smashing the performance of the US stock market over the long term. Okay, so what do I mean by ounces over dollars? Why should we value gold by ounces over dollars? Well, it's quite simple, because if you look at what during the historical periods when the true gold standard existed, the only way gold's value was ever measured was by weight. And I mean, the standard monetary unit was measured by gold in grams and the troy ounces. And the only reason paper notes existed back then was because it was a representation of the gold monetary unit of weight. So gold's value was not ever measured in dollars, euros, yen, pounds, yuan, rupees, rupiahs, or any other type of paper note. The paper note, rather, was just a representation of that gold weight. So in the event that bankers broke the promise of what a paper note represented during a true gold standard, gold never lost any of its value. Rather, the paper note started to lose its value. So, because again, remember, the standard monetary unit was a weight of gold. And 1 gram of gold in Johannesburg, South Africa is going to be 1 gram of gold in Rio de Janeiro, Brazil, or in Montreal, Canada. So the value can never change. Only the price could change. But since price is irrelevant during a true gold standard, because we're not pricing it by any type of paper money, because the paper money note only represents, again, the fixed standard weight of gold that serves as the monetary unit under a gold standard. So what would happen if bankers broke that promise? Then nobody would want to buy paper notes that promise the redemption of a fixed amount of gold weight, but would actually yield a lesser amount of gold weight when redeemed. So in other words, people would get rid of their paper notes and just accumulate and hoard more physical gold. So this will tell you when during the historical times, gold actually served as money, that its value was never determined by some type of fake paper or digital currency price, and its value can never change. Although what would happen is its paper currency price could be manipulated downward to idiotic, nonsensical prices if gold was being priced in terms of fiat currencies like it is today. So the same, let me give you actually a concrete example, because maybe this will help you to wrap your head around this idea, because so much of what we've been taught about gold is money, silver is money, has been pure propaganda, pure lies in textbooks throughout school. So a lot of people really have a hard time wrapping their head around these concepts. So let's go back to colonial America in 1600s Massachusetts, because back then they basically used a silver standard, and one paper note represented 10 silver coins. But when the Massachusetts government failed to redeem those paper notes and live up to that promise that each paper note would be worth 10 silver coins, the paper notes started crashing in terms of silver. So you see, silver did not crash in terms of paper money crashed in terms of silver notes, because the redemption factor for paper notes dropped from 10 silver coins to 6 silver coins. So it lost 40%, because nobody wanted these paper notes, because who cares if the Massachusetts government said you could redeem these notes for 10 silver coins if in reality you only receive 6 silver coins when turning them in. So to really help people understand this concept, I'm going to make this kind of an interactive video. So right now I'm going to insert a photo right now, and take a good look at this photo and see if you can figure out what is wrong with this photo. Okay, so you had your 10 seconds to look at that photo. If you're not sure what is wrong with that photo, then come back, because at the end of this vlog, I'm going to tell you exactly what is wrong with that photo. And it also gives you time to marinate about what's wrong with that photo. Check the digital timestamp on this video as it's playing now, and so you can mark where this photo was inserted and come back at the end of the vlog, even before I tell you what's wrong with that photo, and see again if you can answer the question if you're not able to answer it now, because by the time you're done watching this vlog, you should be able to easily answer the question of what's wrong with that picture. Now, here's another thing to think about, okay? What banker promise does a paper note today represent? Okay, again, what banker promise does a paper note today represent? Today, a paper currency note obviously does not represent the promise that you could turn it in for a specified weight of gold or a specified weight of physical silver as it did back in the day. But it still does represent a promise. Okay, so have you answered that question? Okay, now let's compare it to what that promise actually is. That promise is that that paper note can actually buy you the same quality and quantity of a good and service year after year after year, given the same supply and demand elasticity for that same product and service. So basically that means if you have a 50 euro note and you can buy a certain amount of food with it, that 5 years from now, given the same, roughly the same supply and demand for those food items should be the same price. Same thing goes for any other service. If you have a $100 note, then and it buys this basket of goods and services, and next year it should be able to buy the same basket of goods and services for $100, given the same demand and supply elasticity for that product. But we all know that's not true, right? Because we all know inflation exists, and that every year we have to pay more and more of those 50 euro notes and those $100 notes to buy the same products, goods and services. And you know why that is? Because that bankers are breaking their promise of what even that fiat currency note represents to us. They're breaking that promise year after year after year after year.